Good afternoon. Thanks everyone for joining us today. I have Sailfish Royalty presenting. So Cesar Gonzalez, CEO, is here, and Paulo Lestrito, VP Corp Dev. Before we get into the presentation, as always, this will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's presentation, which can be found on their website. And there will be a Q&A period at the end, so feel free to input your Q&A in the box at the bottom of your screen, or you can email them to me at deborah@adcap.ca. And with that out of the way, I'd like to introduce Cesar, who's going to do a little bit of an overview of the company, as well as give us an update, because there's been a lot of things happening.
There have been a lot of things happening, and we had telegraphed just about all of those things, when we had timelines and when we knew we were going to move forward with certain decisions. And I'd like to just remind investors that everything that we said would happen has happened. Some of the items were delayed a bit. This summer was tricky with there are labor shortages across the spectrum of the labor market, not just at the lower end, but we dealt with the exchange in Canada, and they were shuffling some labor shortages around as well. And as a result, the spin out of Swordfish was delayed, but here we are. We've press released it. Paulo has joined me today. He's the VP Corporate Development at Sailfish to talk specifically about that. So it's the first time we've been able to do this now that we have all the information out there in the public domain. And I put up on the screen here a capital structure summary of Sailfish to remind investors who have known the company for a while, because there are things on this slide that change. The share price, obviously, but then the shares outstanding, we are still active on a buyback. So that number keeps going down. And also just to remind people about the strategic shareholder that we have, the over 55% on a fully diluted basis, Wexford Capital, who has been a very supportive shareholder since the beginning. We count Paul Stevens as one of our large shareholders as well. And then management between our outright shares and our options are a big chunk. So we're fully incented to do the right thing for shareholders, because we are large shareholders ourselves. This is a company with no debt. As you can see here, what we do is we add the cash plus the receivable on the gold-linked loan. That's a loan we made recently to Mako, where we get paid back essentially 205 ounces a month at the prevailing gold price. It's the average for the month, the preceding month. And that has a floor and a ceiling that yield us anywhere from 8% to 22%, depending on the gold price. It's a very attractive piece of paper. And it's another source of income for the company to back up what we announced recently as well, which is a dividend. So this is a company with no debt, bunch of cash, buying back shares, receiving cash flow from a very high grade and profitable mine in Nicaragua. And we like to share the spoils of that by not only buying back shares, but now paying a dividend. When you add it all up, there's a slide in here that shows you what our dividend yield is compared to the other dividend payers in our sector. We're multiples above everyone else. And our share price has gone up a little bit. So this is still a 4% dividend, but a little lower than when it was when I put this presentation together. But it's a nice hefty dividend. And I'll end this with another just overview of the company. There's 6 bullet points here that are very important. We do have an increasing amount of cash flow. People sometimes will focus on the dividend, the buybacks, and say, okay, well, there's no growth in this company. That's not true. We have cash flow that's growing from the mine in Nicaragua. It's just getting ramped up. The last quarter produced over 8,300 ounces. And this quarter, for the fourth quarter, we're on track to do better than that. There's no official guidance, but I wouldn't be surprised if there's over 10,000 ounces produced in that quarter. I think that would be a conservative number. We have the spin out, which Paulo will talk about in detail. That's this bullet 2, maximizing value. Significant opportunity or optionality. That is the Spring Valley Gold Project, which is a 3% NSR on a multi-million ounce deposit in Pershing County, Nevada. It's one of the largest undeveloped gold projects outside of the Nevada Gold Mines LLC JV. That's a JV between the two largest producers in the state, Barrick and then Newmont Gold Corp. So this is a deposit that's owned by a private equity fund. They don't put out press releases. They don't provide much in the way of updates. That worked in our favor when we acquired the asset in 2019, but is not working in our favor now that we're owners. But that will change. Waterton is not going to own this project forever. There's going to be a day when they sell it, when we have a press release with updated data, maybe a reserve on the back of a PFS, and that is a big optionality for Sailfish shareholders. We have cash flow coming from Nicaragua from two sources, a stream, and then this gold-linked loan. And then we have a royalty on the area surrounding the stream portion. So we also have upside there. But we have the optionality from Spring Valley, which right now is very hard to value. There was an acquisition this year by Cisco Royalties, one of the larger royalty companies in our sector. They bought a 2.5% to add to their 0.5%. So now they own 3%. And when you do a look through on what some of the analysts are valuing Spring Valley before this transactional event, so before a sale by Waterton, you have MPVs as high as 99 million Canadian dollars, essentially our whole market cap just for that 3% NSR. We have a strong balance sheet. There's no debt. We've got cash flow coming in. We have this gold-linked loan. So, there's no financial risk from that perspective. We've been buying back stock of 7.6 million shares since we started our program in the summer of 2019. We're in our third normal course issuer bid. We exhausted fully the second one. We came up a little bit short on the first one, but it was, a small percentage of what we didn't buy. And then on the dividend, we've announced a dividend. It was paid actually on Friday. I checked my account this morning. I received my cash. So I'm hoping that everybody else that is a shareholder before September 30th, that was the record date, also received their cash. If you didn't, feel free to shoot me an email and we'll track that down for you. But it's the highest dividend yield of any royalty company in the precious metals sector. That's Sailfish in a nutshell. And I want to hand it over now to Paulo to talk about Swordfish, which is going to be the vehicle that acquires Gavilanes. So it affects the spin out that we've been talking about for pretty much the whole year. Finally, we're able to press release it. And he will be able to give you more details on valuation, on strategy, because anyone that's a shareholder of Sailfish now will be getting a pro rata of this new company. And you should know a little bit about what you're going to be getting. It's going to come in the way of a dividend, but it's going to be a share, not cash. So Paulo, I guess you could introduce yourself and talk Swordfish.
Absolutely. Good morning, everyone. Thank you, Caesar. Thank you, Deborah, for this opportunity to talk about Swordfish Silver. It is my great pleasure to be involved and talk about this story. Essentially, you're looking at a vehicle that will have two assets. One asset is in Mexico, which is called the Gavilanes project. And the second asset being contemplated is a project in southeastern Arizona in Cochise County called the Commonwealth Project. Both assets combined currently have a 43101 compliant resource of approximately 48 million ounces of silver equivalent. And in our humble estimation, grossly underestimates the resource potential at both projects. So the purpose of this spin-out vehicle is to take that vehicle, finance the vehicle with the majority of that funding going into exploration at both projects. And when we first got involved at Gavilanes currently has about 22 million ounces silver equivalent. The thinking is that that resource is going to grow substantially. Over 80% of that resource is actually silver. So it's not like we're taking lead and turning it into precious metals. It is predominantly a silver resource, and that is 31 kilometers away from San Dimas's operation. And the second asset is about 230,000 ounces of gold and about 19 million ounces of silver in a heap leach project, like I said, in southeastern Arizona. But from a geology standpoint, really is screaming for additional exploration dollars. It's a low sulfidation epithermal system. No drilling at depth has been done. And it looks like it's got a real opportunity of finding the high-grade core beneath this this heap leach project that's currently been defined. So in a nutshell, this spin out is going to be coming out at roughly half the valuation of its peers. And we think that we're going to be able to grow that resource quite rapidly over the course of the next 18 months and produce an updated 43-101 resource sometime in 2023 with the goal of making shareholders some additional money.
Thanks, Paulo. I had this slide up here for you because it's the one slide in the PowerPoint for Sailfish that has information on Gavilanes. Do you mind running people through this? I think one of the important points is that many silver deposits in Mexico have heavy components of base metals, which with the recent squeeze in zinc, or the supply shortage, I should say, is actually a good thing. But over the long term, we want to take a view on silver, and we have a very bullish view on silver. So, our deposit's special in that it's predominantly silver. Paulo, you can talk a little more about that.
Yeah, absolutely. So you're looking here at the resource using 100 silver equivalent gram cutoff, the 22.3 million ounces of contained silver equivalent that I was referencing earlier is highlighted there. Again, the average grade on a silver equivalent basis is 245 grams per ton silver equivalent. But if you look at just the silver only component, it's nearly 19 million ounces of silver at 207 grams silver only. So you can see it truly is a silver resource. We are not converting lead into precious metals here.
There's one question that came in, Caesar. I can see you're typing an answer. Did you want to answer it online? Do you want me to pose it to you?
Yeah, I read it. It's from James. It's a very good question on M&A. And yeah, I'm about 2/3 of the way typing the answer. So I guess I'll just answer it for everyone's benefit here. Let me just get off of this. I'll stop sharing so that we can be in conference mode. And on M&A, we've always been open to M&A. We've actually been active recently on the sell side, where we had a royalty called Tocantinzinho, hard to pronounce, so we stick to TZ. It's a project in Brazil that recently got sold. It was owned by Eldorado, and it's now inside of a junior called G Mining. And we sold it in two parts. The first was for 9 million, the second was for 10, so a total of 19 million cash. And we used that cash to clean up debt on the balance sheet, to buy back shares. It was the backbone to then turning around and lending that money to Mako on this gold link note, which, as I mentioned earlier, has a floor and a ceiling that equate to about an 8 to 22% IRR or yield. You could think about it that way. So we have been active on the M&A front. But the question that James posted was, have you looked at any of the other royalty stocks that have gone down a lot? And are you interested in buying any of those? So we've been selling. Are we interested in buying? There are a few that have piqued our interest, but M&A at the corporate level is difficult, not because of valuation, but because of personalities, dealing with other management teams. We might have a big interest in executing something, but other people at depressed valuations might want to wait out for a higher price. And the thing about royalty companies is that unlike operating cos, when operating cos get in trouble, they've got mines, projects that need capital, especially a mine, especially if you're building something. And you can get companies that go into distress and then are forced to sell. It's a trigger point. Not so much with royalty companies. They don't have operations. They're just receiving cash on a passive basis. They may have elevated G&A, but they could always reduce that by letting people go and rationalizing their cash flow. But unless they have debt, there's really not a situation in the royalty space. So you really have to go through the front door, and it's made conversations we've had difficult. So we're looking, we're interested, but it's not so easy. It's not just about simple valuation. You also have to deal with management teams on the other side.
There's another question there, Caesar, just talking about sizing up the pro rata fish dividend to Mako holders. Have you discussed the chance that the transaction could deflate shares of Mako or fish?
Yeah, I see that's from Tom Calander. It's a very smart question and one that would be applicable if this were a company with a 5 billion market cap that has coverage from a dozen analysts and that has a fluid functioning market. But that's not what we have with Sailfish and with many of the juniors in our sector. There's not one analyst that covers Sailfish. I would argue that the value of Gavilanes has never been part of the valuation of Sailfish. So dividending out Gavilanes I do not see the stock price going down, because in the conversations leading up to this event, where now it's formal, we have approval from the TSX-V, we're doing this. Paulo is going to be leading the effort on that along with Akiba. I think there are some shareholders that have started buying Sailfish because of that, but it's the difference is our share price going from $1.40 to $1.45, not going from $1.10, which it was at less than a month ago, to $1.40. And that is just based on the cash flow from San Albino. It's based on the dividend. It's based on the Spring Valley optionality. It's based on things that are outside of Gavilanes. So that's how I would answer your question. I don't think that value was ever attributed to us, at least not until recently.
Got it. I have a follow-on question, actually, just about how do you look at valuing the company yourself? Like, do you have some of the parts valuation? How do you think about the different pieces and putting them together? I think you referenced, you've got the Gold Link loan, you've got the value in Spring Valley, you've got cash, you've got Gavilanes. Like, can you kind of walk us through how management looks at the value of the company?
Sure. So we start with cash flowing assets because those are the most, the easiest to value, normally a DCF approach for that. And we have San Albino. We have a stream, which is equivalent to 3% NSR. And then we have a 2% NSR on the area surrounding that stream. It doesn't cover the two new concessions that Mako has acquired and been granted, although that can be fixed through some type of transaction where we put royalties on those in exchange for cash or some other assets, and that's not lost on us. So we have the total exposure. But just the stream is doing, so last quarter, Mako sold about 8,300 ounces. That's in a quarter. So, that's ramping up. The production from September was more than the previous months, and I'm very familiar with that operation because I also have a role with Mako, and so does Akiba, and we're on a run rate that is going to be more than that for the next quarter. But let's just use a 10,000 ounce run rate to make the math easy. So 10,000 ounces, you get 3% times 0.03. That's 300 ounces a quarter times 1750 gold. That's 525,000 times 4. That's around 2.1 million of after-tax cash flow from that one stream. That I think is going to go up, and I think it's going to be maintained beyond the stream. In other words, that 2% on Las Conchitas, El Golfo, the ability for us to put another 2% on Puerto Rios and Segoviana, where I think there are going to be other mines. The vision at Mako is to have 2 or 3 pits going at all times, feeding into that central milling location for as far as the eye can see. So let's say a normalized cash flow at 1750 gold is $2.5 million. If I look around at some of my royalty peers, I know companies that have 3 or 4 royalties that are paying in aggregate $5 million or so, and they have $100 million market cap. So let's just say I take half of that, because we're roughly half that cash flow. This is aggressive. That's about $50 million. Do I think San Albino, everything we have, the exposure there is worth $50 million today? No. Do I think it has potential to be that? Absolutely. So that's one. And then you have Spring Valley, which is not in production, which is owned by a private entity that doesn't put out any press releases, doesn't have to. They're a private equity fund. recently, that group, Waterton, transacted on a mine that they bought at the same time called Ruby Hill. They sold it to i-80 Gold. That happened within the last 2 months. So they're becoming more active. I've heard rumors that there's a PFS, that there's a data room, that people are evaluating the asset. So it could be any day now that gets sold. And I have a look-through valuation on that asset because the guys at Cisco acquired a 2.5% to complement their 0.5%. And there are research analysts that cover that stock. One of them put out a note that had the valuation at about, at the time, 99 million CAD, about 75 million US. So let's just say that's another, 60, 70, 80 million bucks with a ton of upside, because that's pre transaction, pre press releases, pre PFS, all that stuff. Once it's out in the open, people can actually sit down and really analyze the numbers. I think my number for San Albino that I just gave is high. That's a potential. If in a year or two, when you can prove out that that there are going to be multiple pits, and that there's going to be, once the production from this one goes down, the production from that one takes over, and that there's going to be, 1,000 ton per day scenario, and that you're going to get at least 2% from the surrounding operations, and that 2.5 million plus of cash flow is sustainable for, a decade plus, So that I'd say it would be anywhere from like a 20 to 50. So call it 30 million plus what we have at Spring Valley, which today I think is easily worth, 50, 60, 70, that kind of range. And then once it's sold and there's a plan to actually put it into production, I mean, it's a royalty capable of paying in a year over $10 million a year in cash flow for 10 to 12 years, based on a 5 million ounce deposit where you end up recovering about 3 million of those ounces over a 10 to 12 year time frame. That's not common. If you look at all of our peers, meaning sub 500 million market cap royalty cos, there's not one that has a $10 million a year precious metals royalty. I think Nomad comes close. They have something in South Africa that's interesting, but it's had some issues. But the other guys, the 100, 200, 300 million market cap royalty cos, nobody has a 10 million a year royalty. And I think there's strategic value to that. So just by talking about Spring Valley and San Albino, you could see how we justify, the valuation that we have today. Then you throw in the spin out of Gavilanes, which is going to be paid out in the form of a dividend, and then you take some upside scenario cases to both Gavilanes to Spring Valley and San Albino, and you're at 20, 30% valuations higher than where our share price is today. And I think the difference between Sailfish and some of our peers is that we take matters into our own hands. We don't, if I think the stock's cheap, I can go out and buy it. And we do that. And we've done that quite aggressively. And now we have this dividend, which I think is going to underpin that valuation as well. And it's not like we picked that number out of thin air and said, oh, that sounds like a good number. It was based on where we think the cash flows from San Albino are going to backfill that dividend. So our goal is to make it sustainable. Right now, it might seem like we're paying it, 50% from cash flow, 50% from cash on the balance sheet. That might be the case for the next year or so, but give us time. And I think people are going to be pleasantly surprised when they see what San Albino is all about.
Great. Thank you for walking us through that, Cesar. I had one other audience question, which was about Gavilanes. How did Gavilanes acquire Commonwealth, or how's that transaction happening? Last I recall, Wexford owned it in consideration of extinguishment of Marlin debt. Can you walk us through just the logistics of what's going to happen with Swordfish and the spin out?
Cesar, do you want me to handle that?
Absolutely. And good institutional memory there by the shareholder with that question. Because yes, it was inside of Marlin, and then it was extinguished. It was acquired by Wexford in exchange for extinguishing debt. So that is accurate. And this transaction to get Gavilanes inside of a separate company along with Commonwealth, Paulo worked on structuring that, and he can give you more details.
So the book value of The Commonwealth asset is north of 70 million US. Basically, what we're doing here, it's a three-way transaction. There's a numbered company. I don't remember the number right off the top of my head. It is basically has an LOI directly with Sailfish to acquire Gavilanes directly from Sailfish. And that same numbered company also has an LOI with Wexford to acquire the Commonwealth asset. And that three-way deal will culminate in Wexford owning a big chunk of the numbered company, as well as Sailfish owning a big chunk. Specifically, on a pre-money basis, Sailfish will own 22% of Swordfish once it gets once it comes out into the public domain. That's pre-money. So the consideration being offered directly to Wexford for the Commonwealth asset is shares in the new company. And the pre-money valuation of the whole entity of Swordfish is $25 million. So you're getting it at a steep discount relative to book value.
Yeah, and I'll comment on that. We want this deal to work. Over the summer, silver was on a tear, and it was approaching $30 an ounce. Today, it's back down to, where is it, 23 or so, staging a comeback. But we're cognizant of the different market. We were hoping to be able to launch Gavilanes sooner, but here we are, we're launching it now. We want to make this deal attractive for institutional investors. There's a requirement by the exchange to raise a certain amount of money. In this case, it's about US $5 million. And that's to fund a budget for, I think, the next 18 months. And we want to make sure that money gets raised. So we're pricing it at a level where we think we can get the deal done. We're also talking to strategics. We're doing everything we can to affect the transaction. We think it's, Gavilanes does not belong inside of Sailfish. And I think this is a very good alternative. It creates a unique company with a development project in Arizona, with an exploration project in Mexico, silver focused, where if you look around at the silver focused companies, Paul has done a lot of research on the comparable companies. There aren't very many. And I think Swordfish will fit really nicely in there.
Yeah, just to piggyback on that, normally these things trade at about $1 per ounce silver equivalent, and the valuation that we're contemplating is roughly half of that. So the hope is that we raise this capital and the share price re-rates as a function of the market. There's a follow-on question, Deborah. Do you want to ask?
Sure, you can answer directly. Yeah. I can ask it.
Yeah, Robert's asking, is Wexford recognizing a gain on the Commonwealth deposition? So what we can say is they're actually going to be recognizing a loss as a result, because, like I said, the book value is nearly 70 million US. And so the transaction that we're actually contemplating is going to value the asset at a much, much lower level. But the purpose of doing it at this lower level is, one, we want to attractively price the vehicle, but two, to make sure that anyone who gets involved in this new vehicle is going to make money right out of the gate. There's another follow-up question by Robert here. Will Gavilanes trade on the U.S. exchange? It is our intention to eventually have it listed on a U.S. exchange as well. So yes, it's a great question. There's no doubt that U.S. appetite for silver specifically is voracious. And so the intention is once we get this thing into a public vehicle, that we will also have a U.S. listing.
Yeah, and to manage expectations, it'll likely be an OTC, QX type listing, which is what we have for Mako and Sailfish.
Right. Well, I think that's it for audience questions. Was there anything additional that you wanted to add, Caesar or Paulo?
Maybe if I can jump in, Caesar. If anybody has any specific questions with regards to the geology and why we like the exploration potential at either Gavilanes or Commonwealth, we're happy to address it offline. Please feel free to reach out to Deborah. There's a lot of data that supports the exploration potential specifically at both projects. And so happy to walk through it. The reason why we just didn't do it now is we didn't want to bog down on the details, but happy to go through it if anybody's got specific questions.
Yeah, actually, I think this is an important point. So why did we pick Paulo? And who is Paulo? And Paulo, give people some background. I think by now, I saw Tom Calandra and Bob Bransford asking questions, James Bellin. A lot of these guys I know, I've met with them. I've had drinks with them. They know who I am, my background, and I'm a finance guy. But you are new to the team. Tell us about yourself, Paulo.
Okay, happy to do that. So I'm a rock mechanics engineer by training. I've been around heavy equipment since the age of 12. I've worked out in northeastern BC at a coal mine. But the majority of my career is actually working in finance. I worked at TD Bank, Scotia Bank, and a number of boutique firms with some of the best and brightest people in the industry. I worked as a mining analyst. And some of you may know the work that I've done when I was covering the precious metal space. I was covering things like Kirkland Lake Gold when it was sub the $50 million market cap in 2004, Lakeshore roughly at the same time before it was taken out, Remarco, Victoria Gold, Volta. So the idea here is to take the lessons that I've learned from the years and years of doing analysis at some of these firms and apply it to making shareholders money through this vehicle. And the key thing here is to one, start off at a valuation whereby people are getting in at a good price, but two, to also create that value using the many tools that we have in our toolbox. The most important one in this instance happens to be exploration, and we've got a great exploration team at Swordfish.
That's great. I appreciate the overview. Caesar, is there anything else you wanted to add in?
Just to regurgitate some of the stuff from the intro, which is we've done many of these webinars, we've done interviews, and we talked about things that were in our control for the most part. I talk about the optionality at Spring Valley, which is not in our control, but we gave ourselves a chance by acquiring that asset when it had some hair on it and it was unloved. Waterton had a convertible piece of debt in the company that owned it called Terrico, which made them into a bit of a distressed company. And we saw the value in the royalty itself. And so we looked through all that stuff and we fixed it. We paid off Waterton, we acquired Terrico, and here we are today. The company is nice and clean. We sold off an asset that it came with an asset in Idaho that we sold, used that cash to buy back stock. So we're guys that are incented by doing the right thing for shareholders. We've proven, I think now, since Sailfish has gone public, which wasn't that long ago, the deal closed in December of 2017 to acquire Tocantinzinho, and then the first trading happened in January of 2018. So it wasn't that long ago. And we set out to create a very shareholder-friendly company. Deb, you have many, many clients, and they talk about shareholders and how much they value their shareholders. Well, we've been buying back stock. Now we're paying a dividend. We run a very lean overhead, and we are large shareholders ourselves. So I think by now we've established a track record of doing what we said we're going to do. And when I talk about the upside at San Albino from a production standpoint, I'm not talking about that as an outsider. I'm involved with Akiba, with Jesse, with Millie, with the whole team on the operations, the day-to-day. I see what's happening there. And I encourage anybody who's interested in Sailfish to also be interested in Mako and to follow the CEO there, Akiba. He keeps a Twitter account. He's posting cross sections of faces that we're mining right now. We're actually mining them as we speak, that are averaging 15 to 20 grams per ton. The vein portion, and then with that we get a hanging wall and footwall, which is only 2.7. And I say that jokingly, because a 2.7 gram per ton open pit anywhere in the world, even at elevated strip ratios, is a gold mine, to use this proverbial term. But we have these veins that we're mining at surface that are just out of this world. Highest grade open pit on the planet. It's smallish now, 30, 40,000 ounces, but it's ramping up. And I think what's more important is that it generates a lot of cash. So, just for anyone that's new to the story, we haven't been around that long, but we've done just about everything we've said we were going to do. Some things have taken longer, but we checked off a lot of check boxes there.
Agreed. And anyone that's interested in Mako, we are doing a webinar tomorrow at the same time with the CEO. So feel free to tune in or catch the replay. And there's tons of videos from both Sailfish and Mako on the Adelaide Capital YouTube channel. So feel free to check those out. I think it was just over a year ago, Caesar, that you asked me if I'd be interested in working on Sailfish with you. I think it was September of 2020. And you said, we've been a little bit quiet, but we've got a plan, and these are the things that we're going to execute on, and it's going to be newsy. And in the past year, like you said, you've really achieved all the milestones that you set out to do. Gavilena's being one of the last ones. So congrats. It's been a really good year.
You know what, Deb? I think the secret was hiring you to tell people versus me, because you seem to be a little bit better with people than me, I guess,
I don't know if that's true. But no, it has been a newsy period, and you've delivered on all the milestones. So as somebody that works with companies, there's not much more I can request, right? And, when I look at the chart, you're kind of at the same level that you were at a year ago. I mean, like all the rest of the precious metals associated stocks, things fell off a bit and you've recovered, but really it's been a year and it's kind of at the same level. And it's shocking given everything that's happened within the company. So I think you're right that based on the growth potential, the spin out, the value that's implied in some of the parts that you walked us through, I think there's still a lot of upside in the company. And so look forward to hopefully helping you execute on some of that.
Absolutely. So thanks, everybody. If there are no more questions, Deb, I think we can.
I think we're good. Appreciate it. If anyone has any follow-up questions or they want a meeting to go through some of the geological elements of Commonwealth and Gavilena's, please feel free to reach out, and have a great afternoon.
Thanks, everybody.
Thanks, guys.